What a bloodbath we've had in the last 2 days. Here's some facts. In just the last couple of days, the market's dropped almost 4,000 points, 3,800 points plus. The S&P 500 loses 9% just in a couple of days, throwing us into a market correction. Tariffs help get the ball rolling here. Oil down 14%, down to $62 per barrel. Fed says no rate cuts, inflation risk are up, VIX spikes higher, which is the fear indicator. And what is shocking, even though economists are saying now that the odds of recession are up by to 60%, jobs are coming back. We added last month 228,000 jobs. Unemployment's at 4.2%. My name's D7 here at Grok Trade. Been trading in live markets using technical analysis 28 years or so. I'm a hedge fund manager and I own the hedge fund. Here's a couple stats for you before we get into some technicals, and at the end of this video I'm going to tell you if this is a buy opportunity or a sell opportunity where we're in right now. Okay, big news coming. Now, in the last 100 years we've seen 56 corrections. What's a correction? A 10% drop or more. How many times has that happened in 100 years? 56 times. So every 1.7 years, so we'll just say every 2 years we get a correction. A 20% drop in the market, it's called a bear market. 20% is a bear market. And how many times has that happened? Around 25 times. So in other words, every 4 years we go into a bear market. Every 4 years. How about a 30% decline? Well, a 30% decline has only happened 13 times in 100 years. How about a 40% decline? This only happened 7 times. How about a 50% plus drop? It's only happened 3 times, but not any time in modern history because that happened in the Great Depression. Okay, let's get into technical analysis. Like I said, at the end of this video, I'm going to be sharing with you if this is a sell opportunity or a buy opportunity. We're going to get into some technicals. Bear with me as we do this. We have the S&P 500 ETF. We're looking at some major support areas on the daily chart. So if I go to the daily chart here, you can see this big time daily chart right here. We have major support on the spider. Why do I like the spider? It's an ETF, exchange traded fund on the S&P 500. It gives me volume print. I want to see price print and volume print. King and queen, I want them working together, and that's why I look at both. That's why I look at this instead of just the indice itself. Do I have major support? Yes, major support coming in. If you look at this, major support, we're there on huge volume, gang. I'm going to pull in the RSI. RSI is relative strength indicator. Anytime it's above this purple line, that means you are overbought. Look for it to start selling. Anytime you're down below the purple area, you are called oversold. Look for people to start buying. That's where we're at here. If I were to bring in a lot of data, you can see going back, the last time we even got near this area was in 2022, and before that was 2020, which is that Corona crash. This does not happen very often, that the RSI gets this low. But nonetheless, here we are. Let's go to the diamonds and take a look at that. If you look here at the diamonds, big drop, broke a symmetrical triangle to the downside. That happened Friday, which was just a nasty drop. Dow down 2,231 points. It's just a huge drop. Down 5%. If the markets are down 1%, that's one thing. 2%, that's nasty. 3%, that is crazy. We're down 5 to 6%. Do you know that the financials are down 7% in a single day? That is nutso. That is a huge drop. Circuit breakers never tripped. The markets, they just kept them running. Very fascinating. Diamonds, look at this. Majorly oversold on the RSI. And if you look at the times that we were oversold in the past, like look at this. We come across right there we are. It put in these lows here before it rallied up. And I could go back, look at this. Last time we were down here, this was the in 2022, and it rallied up right after that. Okay, so that's what we're looking at. That's what we're looking at. So RSIs are something to be paying attention to. Now, as a technician, I know this, gang. If I were to take a look at this, just the price action, this is a symmetrical triangle. We broke it. It should continue downward. However, if we are at these areas of support, see that support there, and we immediately correct itself, that will be a jab, and that could get bullish going back up to this area of resistance. And then the question is, will people sell into that resistance right there? More on that later. If you look here at the Qs, big, sizable waterfall straight down, 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 down. Major support coming up. We got huge volume. Is that volume capitulation? Which it could be. That means a reversal. It could mean that, gang. Major support there. Will we buy? But let's bring in RSI. Say, are we oversold? 100% we're oversold. So that could be a potential buy opportunity. I'm going to go to the financials first before I go to the small caps. Major support here at the financials. If you look here, resistance, support, boom, support potential there. Going to blast down through that 100%. Markets can continue just to slide straight down for days, or weeks. It could happen. And if US dollar, if you look at this, US dollar made it in a huge about face. Look at this. Big wedge, jab, corrected itself. The question is, will it blast up through that? If so, it will put pressure on precious metals. It will put pressure on commodities as a whole and on the stocks. If you look at gold daily, been selling off, gang. And this is, if you look at this, it came up and now it's now it's dropped. This is pretty bearish. Not nearly as bearish as silver. Silver is just down. Came near this support line. People buying this up. This is a buy opportunity for silver. It kind of looks like it. RSI is saying potentially. But check this out, gang. I know I'm throwing a lot at you very quickly, but I want to look at the weekly charts, okay? Oh, before I do that, I'm going to go over here to small caps and show you what I was telling you on small caps. Small caps. The thing I want to share with you on small caps, okay, is something that we're not seeing on any other major indices. Okay, symmetrical triangle, and it broke down. Okay, yeah, we're seeing that on all major indices. We got that. Okay, cool. But let's zoom in and see really what this is telling us. Really. Oh, you're saying that we're dropping, and we got a large lower shadow. That is a hammer. Hammering out the bottom. This is telling me that small caps, that people are saying that, ooh, let's not sell this anymore. Let's look for a buy opportunity. That's what we're seeing. So small caps are saying, hammer time, look for this to go higher. Huge volume, capitulation down here. Are we oversold? We definitely oversold. And if we do bounce, that means this hooks higher, and that hooks higher. We have a slightly higher swing low for you technicians out there that can follow this. This is a bullish divergence, and this, if it were to come higher, gang, higher, meaning we got back above this, especially if it gaps higher, with two open windows, we will have what's called an abandoned baby reversal pattern with a hammer bottom. If that were to happen, and we close back above this, gang, that will be what's called a bullish death hook, and this thing could get bullish and quickly and rally straight up to this resistance. And then the question is, will we stall here, and will people sell into that strength and come back down, showing a bullish death hook, a rejection, meaning that it would not come through, follow through as it normally does. It's highly probable that if we were to rally up, close back above in this area, that this market could and should rally. However, it's very rare, but these things can fail, meaning it comes up, hits the reason, and then comes back down. Very rare, but it could happen. So I want to look at something here, gang. If I go over here, I'm going to look at the weekly charts, and I'm going to make this very quick, because then I'm going to get into the VIX, and I'm going to end with this. We come up, down, major areas of support, but we're not at those support levels yet. Do we have another week of getting down here before the buying opportunity happens? Maybe. So next week could be very bloody. However, the short shorter time frames, the dailies are telling me that it's already looking to reverse and head higher. If you look at the diamonds, we're not at support yet. We're not there. Could we get there 100%? Could we blast down through it 110%? It could happen. Or are we going to reverse due to the markets being near oversold? If I go back to spiders and look at this, we're at the oversold area. Now, if I go to the Nasdaq, the Q's oversold area nearing support. Russell 2000, we broke a symmetrical triangle and we're at the oversold mark. If we go up, that would be a jab and it could get bullish and quickly. The financials, if you look at this, we're not oversold yet on financials, and we have support coming up way down here, so we have a lot of downside opportunity. Okay, now gold, if you look at this weekly, it's a chink in the armor. Silver, much bigger chink in the armor. Okay, this was an ascending triangle, rising wedge breakdown right there. That does not look good for silver on the weekly chart. Now, the big news here, gang, and I'm going to end with this. I hope this was share worthy. I hope this video is share worthy. I shared a lot of data with you, both technical and the economic facts. I crunched a lot of data using a lot of AI to help me get the right information that I led this video with today. If we go over here to the VIX, okay, now I'm not going to assume everybody knows what the VIX is. The VIX is a volatility indicator. Volatility indicator. This volatility indicator measures the fear. The higher the fear is, the more this goes higher, and that is it's an inverse indicator, meaning this: if the markets were to go lower, this goes higher. If the markets go higher, bullish, this goes down. We are up over 45 right now. The reason I pulled up a monthly chart, because I'm going to go all the way back here to the dinosaurs and all of the history that we have here, going back into 1990, 30 plus years ago. We have only been at 45 10 times. 10 times has this happened. 10 times in 30 years. And we're there now. Usually, in other words, when we get here, we usually don't stay too long. Now, there are other times that we've gone much higher. This can happen too. This, I just want to put this in perspective. This huge spike, that was the Great Recession of 2007, 2008. Great Recession. You know what this spike was? The great spike that we saw in the Corona crash. There it is. We are up here. If you look at this, very seldom do we stay at these levels. We pop up, drop, pop up, drop, pop up, drop. And if you're dropping, that means the markets got really bullish and fast. All major markets have dropped, especially the last 2 days. Guess the one thing that did not drop? Bitcoin stayed solid. Could be a buy opportunity for Bitcoin. What's interesting is you had silver dropping, gold dropping, everything dropping. Guess what was not dropping here recently with the markets? And that is Bitcoin. With that, I'm going to go into a monologue. If you don't want to hear my personal opinions on things, you're excused to go, and it's so glad to have you. Feel free to subscribe if you want more technical analysis like this, and give me a like. Give me a like. Because I didn't run any ads on this thing. Because I didn't run any ads, that's worth a like and doesn't cost you anything to give me a like. All right, here are my personal opinions for all of you crazy ones that are sitting listening to me drone on and on. Here's a couple thoughts here for you. Holy smokes, did I hit a crazy nerve about the tariffs? I know 50% of you guys don't like the orange man, okay? I get that. 50% of all my viewers here don't like President Trump. 50% of you didn't like Kamala Harris. 50% of you didn't like Biden. I get it. It's 50-50. We all have our opinions on things, and we try to the best of our knowledge is just to stay factual. What I do know is a large part of the people listening to this right now are engineer minds. Those engineer minds, how do I know this? Because the students that come through are a reflection of the people that watch my videos. I know that predominantly you guys are male. I know predominantly you're engineer minds. That means you're ones and zeros, black and white. You are ones and zeros. You know, you are problem solvers. So you like data and information. A lot of you are lefties. A lot of you are pilots. I get a lot of pilots that come through. I get a lot of lefties that come through, but virtually all of them are engineer minds, and the females that come through are usually, not always, business owners or high on the food chain at the place where they work. We have a mentorship coming up in a couple, soon. That's mainly for the ladies, just because we have 3 ladies taking this class and they are brand new to trading. Okay, now here are my thoughts. The markets are long in the tooth. They've been running up for many years. Usually every 4 years we get a correction. Okay, every 4 to 5 years we get a big bear market. We just, outside the corona crash, we haven't had one for a long time. For that reason, gang, the markets have been begging to pull back. If we got a negative GDP, the markets would have been selling off like this too. If we started seeing jobless claims dropping like a rock, we would be seeing the market selling off. The markets are looking for an excuse to sell something. Tariffs were reported. That was their excuse. They were selling off. People were looking to sell. Why? The 10-year, 2-year bond yield inverted. It was the longest and deepest inversion we've ever seen in history. And then when it corrected itself, then the game was on for a recessionary pullback that usually happens with double-digit unemployment, okay? That is typical. And then the SOM rule, which has never been wrong, said we're in a recession. So that comes with a recessionary pullback in the stock market. Very typical. So we have all of these things lining up for a bearish recessionary market retraction, okay? Yes, any type of news that would be a good excuse to start selling into. People are doing it, and they were begging for an excuse to do it so they could get away and do it with, in good faith. Tariffs were just the thing they were looking for. And the markets have sold off aggressively. And if you don't know how to short the market, if you don't know how to be short the market meaning make money when it goes down, if you don't know about bearish ETFs, you don't know about inverse ETFs, you don't know about leverage bearish ETFs, if you don't understand those or how to use technicals to do that, then you're in trouble. NVIDIA sold off hard. SOXL, SOXL, is a 3 times inverse ETF, or a 3 times ETF going up. So anytime it goes up $1, up 1%, it goes up 3%. But do you know SOXS, SOXS, is an inverse bearish ETF 3 times? So if the semiconductors were to go down 1%, it's going to go up 3%. Do you know SOXS was up 22% Friday? So in other words, learn that stuff. We'll teach you. Do the mentorship. We'll hook you up. Now, but let's get into tariffs. Tariffs, one thing that I want to share with you that you guys, I did a lot of research here. It is worth looking into. It's fascinating. Fascinating. Why would, and I would say this, arguably speaking, I think that President Trump is probably, I don't have data on this. You guys could prove me wrong in the comments, but from my vantage point, from my experience, from what I've seen, I can't think of any other president in history that has more business acumen, more business savvy, more business experience than Donald Trump himself. In other words, I don't think that we have somebody that has as much negotiating experience as Donald Trump. So when I see him make a major comment, and his comment was this: if we lose becoming a manufacturing country, which we have been, we're down to 10% of jobs being manufacturing. It should be in the 20s and 30s. China's been eating our lunch there. then guess what is on deck to happen? And this is a sobering thing. The United States would lose its world reserve status. Let me put it this way. If doing that, it will throw us very quickly into a third world country. If you have vacationed or have done mission work in a third world country, for any amount of time at all, you might have stayed there days, weeks, months, or even years. You know third world country. The rest of us in America, we do not. We can't get our head wrapped around it. Can the U.S. lose its world reserve currency status? Yes. How could that happen? Because we are no longer manufacturing superpower. If we were to continue on this thing, our chances of losing the world reserve status increase exponentially. We have some serious adults in the room. We have somebody that can see a visionary and that can say, we are going down a wrong path. What we have to do is balance this. And by doing that, tariffs are projected based off of experience and based off of data that will in fact increase jobs, not decrease jobs, increase jobs. And guess where those jobs are going to be increased? In manufacturing. By doing that, we ensure our world reserve status, which is critically important. So to do and to make a decision like that takes a lot of gumption, a lot of nerve, a lot of intestinal fortitude to do such a strong act like this, because it brings us into what's called tariff chaos. We're in the tariff chaos stage right now. That's why we're seeing this volatility in the markets. It's part of it. It happens. We're in it. It doesn't feel good. At an uneducated level, we start throwing stones and we get very spiteful and hurt. I shared with you at the beginning of this, bear markets happen. Corrections happen more often than bear markets. Bear markets happen, and then deep bear markets happen, and they will always happen. Are they healthy for the markets? 100%. Are we in one that is healthy for the market? Yes, 100%. It's healthy. Guys, why are you still here? You just watched my video and now you're still lingering around. Might as well be with you now that I have your undivided attention. Listen, if you haven't done so yet, I highly recommend putting in a foundation of trading, your foundation of trading through a mentor. Or learning to fly a plane, you wouldn't just go through ground school before you start flying in the friendly skies. What you would be doing, though, is going up first with your flight instructor. Same thing if you're going to learn to ride a bike, you better have somebody behind you helping you ride a bike. Surgery, you're not going to read a few books and do heart surgery. So every principle and with being guided by a mentor, let finances be this. If you're a trader, you rate you from amateurs to professionals. Mentoring will do that for you. Anyway.